user-defined settings, so you can use it for whatever settings you want. You can obviously use it for bars in the profile block, so you can do 20s or 10s depending upon your market narrative. So you could do 20s or 10s or 5s or 50s or 100s or whatever, and obviously it changes and adjusts with the timetable of the time frame of your charts. So that's this one. And the little blue nonsensy things, the single print indicator, of course, is just these blue things that appear on the side of your screens, and that's just showing you the toxic kind of order flow coming into that area. And that toxic order flow, of course, just means a single print. It means an imbalance, whether it's temporary or not. Each individually are not very valuable to us, but taken together, they become quite an interesting, valuable story. This is called Imbalance Finder, surprisingly enough. So this is called Imbalance Finder. Imbalance Finder. So PM Vol Clust and Imbalance Finder. Well, a mark up or a mark down is simply a fast candle. So coming from a volume area, and it has to come, we always want it from a volume area. So when we get a volume area, for example, if we were to use a profile, or if we were to use profile, or if we were to use that little indicator we had there, you can see if I go into indicators, you'll be able to just simply go to technicals. If you go to volume profile and you just do the fixed range, if I do a volume profile, say from the bottom of the trend here, and drag it across the screens to this point here, you'll see that all the volume is there, right? Even though that's the single biggest volume candle by a mile, that's not where the volume is. The volume is this price here. That's the commercial accumulation. Commercials don't accumulate on these big candles. They accumulate during these sideways phases. So if that is a huge volume area, and it is, so if that's a huge volume area right there, any type of markup or markdown from that would suggest that we now also have an imbalance. Now, we don't know the markup or the markdown is going to happen unless you add value to your chart. So obviously, when I add value to the chart there, I start to ask about whether the markdown or markup is likely to happen here. Well, of course, when I see the Japanese yen doing that, my simple conclusion is it's going to mark down, so I can predict the markdown phase. And sure enough, we get the markdown phase, the imbalance where there are no buyers, only sellers. And that's why the market maker pulls away buy-side liquidity, because there are only sellers. The yen is dropping, the gold is dropping, nobody is buying except market makers. So their job is to pull away liquidity, which means that we get this fast, toxic selling coming into the market. And that's where we get these single prints in terms of order flow. That's where we get market imbalances in terms of the order flow itself, not the price action. This is obviously price action at single prints. And we can see this as an order flow sell-side imbalance. This becomes a commercial sell area. So this becomes a commercial sell area because it's had a markdown. A markdown comes from the fact that the big commercials who'd originally set up where? Well, let's think about where the big commercials set up. If the value is still rising, the big commercials obviously were using this as a profit take, this big volume candle as a profit take. But as the value keeps rising, what happens is the value stops rising. Now the commercials are looking at it from the possibility of accumulating. We all know that commercials accumulate at higher prices. As a rule, there must have been a commercial accumulation here. As a rule, there must have been a commercial accumulation here. And there must have been a commercial accumulation here, because they're all selling these higher candles. That's what we did in the Monday Club classes, sold these higher candles. There must have been a commercial seller here. But look at what's not happening. Look at the volume. It's absolute dross on any one candle, isn't it? In other words, they're just not getting any new buyers coming in. They're not getting any new buyers. Nobody, as I said, is stupid enough to buy at higher prices. There's plenty of stupid enough people to buy at lower prices. There's plenty of stupid enough people to buy at lower prices because this market is in a bullish trend and everybody thinks it's a P shape and it's going to go higher. There's always those people that think the market has to go higher, because that's what's been happening. So there's plenty of buyers. So for the commercials, they can just simply use that buying to mark down the price. So the commercials don't just buy on upticks, they start sell on upticks, they start selling on downticks. And they sell on downticks through that high volume. And you can see the volume builds, the volume builds, the volume builds, it's gone. The markdown has taken place. The commercials crossed the spread because there were no more buyers. Remember Goldman's? Goldman's bid at 5, Goldman's bid at 4, Goldman's bid at 3. That's because there's a seller coming in. Goldman's bid at 2, there's a seller coming in. Goldman's bid at 1, there's a seller coming in. Goldman's bid at 1. Goldman's bid at 1. The sellers are starting to vanish. The sellers are starting to vanish. It's Goldman's bid 2s, Goldman's bid 3s, Goldman bids 4s. The market's now marking up from that bid. And that's exactly what happened here. Goldman's offered, Goldman's offered, Goldman's offered, Goldman's offered, Goldman's offered, Goldman's offered. And they offered 34.5. They offered 34.5. They offered 34.5. They offered 34.5. Nobody was buying. Nobody was buying. Goldman's weren't getting any business done at 34.5, right? They weren't getting any business done. Touches it, touches it. Goldman says, bugger this, for a game of Soji's. 34 sell. 34 sell, straight into the market, boom, markdown. Buyers go, what the hell? Goldman just went 34.5 offered to 34 selling. Let's get out of here, guys. Let's run. And the market collapses. The markdown takes place, and this becomes a commercial buy zone. This becomes, a commercial sell. And because this is a commercial sell, we know about that level when it retests here. See how nice that is? We know about that level when it retests here. And obviously what's happened since with our buy trade is pretty good. If I'm perfectly honest, how good is that buy trade, guys? Woohoo! 23s just traded 27s. Were we right? Or were we right, guys? Were we right or were we right? Again. I showed you the trade. It was live. We shouted it live as well. We told you what to do. We even showed you what price to get in on. And we gave you the perfect opportunity to join us for a perfect $400 winner. $400 winner, guys. Why and how did we know about this level? Because we'd seen a commercial buyer followed by a markup. We did the exercise for you on the right-hand edge before this buy developed away from that price. Because the price was dropping down, I says, let's try and find the last commercial buyer, yes or no. Absolutely, that's exactly why we did the exercise. We tried to find the last commercial buyer. We found the last commercial buyer. And we've had a very nice $400 winner. You can't make it up, can you? You cannot make it up. Perfection, guys. Absolute perfection. Crazy, crazy for feeling so crazy. Brilliant. Beautiful bit of business, guys. Beautiful bit of business. I've got a spread on this